It's that time again. Welcome to Tesla Shorts Time, daily episode 512, coming to you from Vancouver. It's June 16th, 2026. Let's dive into today's Tesla news. Tesla's Dojo networking patents move packet recovery into hardware so the training fabric keeps running even when Ethernet drops frames. Goldman Sachs raised its second quarter delivery forecast for Tesla to 420,000 vehicles. The firm reviewed registration data from the United States, Europe, China, South Korea, and Australia before making the change. The new projection sits above both the earlier 405,000 estimate and the street consensus of 400,000. Full year 2026 deliveries now stand at 1.73 million. The 2026 earnings per share forecast moved to $1.35 from $1.30. The price target stayed at $375, and the rating remained neutral. The adjustment signals stronger near-term order trends without altering longer-term assumptions. From Wall Street's view of vehicle demand, we turn to the infrastructure Tesla is building to train the autonomy that could change those economics. Two new patents describe hardware that stores recent packets locally and replays only lost segments without software intervention. Patent WO 2024/039800 and Patent WO 2024/039794 cover the TTPoE approach. The design uses on-chip cache or SRAM as small as 256 kilobytes and linked lists to track transmission order. 4 pipeline stages handle stream selection, link identification, replay or retire decisions, and pointer updates entirely in hardware. A hardware link timer, working with FIFO memory, checks multiple links in round-robin fashion and adapts its tick period. The system accepts controlled packet loss on Ethernet while keeping training jobs from stalling. Hardware designers usually treat packet loss as a problem to eliminate through credits, pauses, and lossless fabrics. Tesla's recent patents instead treat loss as an expected event inside a controlled AI cluster and move recovery into silicon. The approach stores recent packets locally, tracks order with linked lists, and replays only the uncertain segment when a timer or negative acknowledgement arrives. Because the decision logic lives in the chip rather than the kernel, training jobs avoid the latency spikes that software retransmission would introduce. Every extra millisecond of stall time across thousands of GPUs compounds into lost training throughput and higher electricity cost per model iteration. By keeping recovery inside the TTP MAC block and adapting the hardware timer to the number of active links, Tesla reduces that overhead without requiring a perfect physical layer. The trade-off is that the system must still guarantee bounded loss rates. This design choice also reveals a broader pattern in Tesla's AI stack. Rather than buying the most expensive lossless switches, the company is optimizing the entire path from silicon to software for the specific workload of large-scale model training. While the patents focus on training efficiency, Tesla is also preparing the vehicles those models will eventually power. Remember, we covered Cybercab developments yesterday. EPA filings show the Cybercab carries a 48 kilowatt-hour battery pack and a single front-mounted motor. The documents list estimated range and charging specifications that align with a purpose-built robotaxi. Drone footage captured more than 100 Cybercab vehicles parked in formation at Gigafactory, Texas. The vehicles appear complete and ready for deployment rather than in various build stages. The front drive layout and modest battery size point to lower production cost targets than earlier robotaxi concepts. Production timing and regulatory clearance remain the next milestones to watch. Tesla posted a reminder that its vehicles can execute parallel parking autonomously. The feature uses ultrasonic sensors and cameras already present on current models to measure the space and steer into it without driver input on the wheel. Owners activate the maneuver through the screen or app once the car has identified a suitable spot. The post underscores that this capability has been available for years, yet still surprises some drivers. As the Cybercab hardware takes shape, charging infrastructure for the Semi is also being simplified. Tesla is adapting its plug-and-play supercharger model to 1.2 megawatt megacharger sites. Pre-assembled units would reduce on-site construction time and allow faster expansion of high-power depots. The move treats charging depots as a parallel constraint to vehicle production. Details on deployment locations and timelines are still pending. While Tesla refines its own hardware and infrastructure, a competitor is signaling it will enter the same software lane. Rivian's CEO stated the company plans to launch a driver assistance system comparable to Tesla's full self-driving before the end of 2026. The announcement positions Rivian as a direct software competitor in the same regulatory environment. No technical specifications or naming for the system were provided. The timeline places Rivian roughly alongside Tesla's push toward unsupervised operation. As more players enter assisted driving, real-world safety data from Tesla's limited robotaxi operations becomes relevant. Tesla's limited robotaxi operations recorded no at-fault collisions over 4 months of supervised and unsupervised testing. External vehicles struck the test fleet multiple times during the same period. The data covers a small number of vehicles operating in controlled conditions. Regulators will still require larger-scale evidence before approving broader, unsupervised deployment. While the fleet itself performs cleanly, questions are surfacing about how regulators describe vehicles without traditional controls. Current EPA and NHTSA terminology does not yet address vehicles built without steering wheels or pedals. Tesla's Cybercab and similar programs will require new definitions around driver, operator, and responsibility allocation. Updated terminology could affect how future safety standards are written and enforced. The observation comes from an account that tracks regulatory filings closely. Regulatory gaps are one issue. Another is whether current vision systems can handle unexpected cabin conditions. Researchers showed that low-cost doll heads placed in the cabin can cause Tesla's occupant detection system to misclassify the interior. The test raises questions about edge case robustness in cabin monitoring cameras and software. Tesla has not yet commented on whether the finding affects current production vehicles or future hardware iterations. The finding highlights a potential gap in current vision-based monitoring that could affect both safety features and regulatory scrutiny. SpaceX completed its first Falcon 9 mission since the IPO on June 15. The launch sent 24 Starlink version 2 mini-satellites from Vandenberg. Booster B1093 flew its 14th mission and lifted off at approximately 8:34 a.m. Pacific Daylight Time. The flight was described as routine, yet symbolically significant for the newly public company. Starlink deployment cadence continues unchanged. Elon Musk stated that government incentives represent less than 2% of the combined enterprise value of Tesla and SpaceX. The remark came during a discussion of long-term business economics. It was framed as evidence that both companies have moved beyond early-stage reliance on policy support. It offers a direct counterpoint to narratives that treat subsidies as a primary valuation driver. The Tesla RAWT editor stated a preference for a gold-finished Cybercab once the vehicle reaches customers. The comment reflects growing anticipation around the robotaxi's eventual availability and customization options. It also highlights how the vehicle's distinctive design is already generating personal ownership interest beyond fleet use. Insider Monkey aggregates recent institutional filings and sentiment indicators around TSLA. The report compiles data from multiple large holders without issuing its own price target or rating. It serves as a snapshot of how professional investors have adjusted exposure in the most recent quarter. An analysis examines how Tesla's capital allocation has shifted from a lower-priced vehicle program toward AI and autonomy investments. It quantifies the implied valuation trade-off between near-term vehicle margins and longer-term robotaxi economics. The piece notes that current share pricing already embeds significant success in the autonomy roadmap. Investors will watch upcoming earnings for any updated capital expenditure guidance tied to that shift. Before we go, Keep an eye on whether the stronger order trends noted by Goldman Sachs hold through the end of the quarter in earnings reports. And that's everything worth knowing about Tesla today. TSLA closed at $411.15, up $2.17, 0.5%. If the show saves you time, a quick rating on Apple Podcast or Spotify goes a long way. You can also find us on X at Tesla Shorts Time. I'm Patrick in Vancouver. I'll see you tomorrow. And before you go, this show is part of the NARA Network, a family of daily podcasts covering tech, science, markets, and more. If you enjoyed today's episode, give Fascinating Frontiers a listen, the most fascinating news from space and science. You can explore the whole lineup at naranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.